This is Scott Bauer on the floor of the CME Group, and today is really a trading lesson on emotions, right? We saw the news come out late in the day yesterday about the missile from North Korea, and immediately we saw S&Ps, Dow futures, everything was hit pretty hard, and that was the immediate response. We saw it still on the opening today, and then the market all over the place has clawed its way back today, right? Look at the difference between overnight session to where we are right now. Now, we still have a very real possibility for a black swan event, geopolitical events, and we see a lot of investing, a lot of money going into the safe haven trades such as gold and other areas that we're seeing here, and into T-bills, and we're seeing interest rates down as low as they've been in quite a while. But how much of this is really emotion-filled trading versus technicals in the marketplace? And speaking of technicals here, we saw the S&P in the overnight session trade down to 2428, which was really almost the low that we saw back on August 18th. Really looking at the same situation, the North Korea situation here. Now, that's not a real technical support area. Nonetheless, that was, an area for emotion-filled trading. Now, 2450-ish here in the S&P was major support for quite a while, which we broke last week, which now is going to be resistance. And in fact, the last 5 sessions, we've seen the S&P market come right up to that 2450 level, even just above it, but not close above it there. So that 2450 level, again, which was key support for such a long time, is now looking like it is going to be a very solid resistance area, and we'll see what happens. Can we get the close above there? Can the market sustain above that or not? In terms of S&P E-mini options, what are we seeing here? Well, open interest all across the board is still extremely high coming into the September expiration, which is one of the quarterly major expirations of the year. So that's in 2 weeks now. The expected move that the option market is telling us out to this Friday ahead of the holiday weekend is about $15 or so. So we'll have to see how that plays out. Obviously, if it's to the upside, that's going to put us above that 2450 resistance area that we're seeing. Trading wise, the put call ratio is right in line, 3-to-1, which we typically see. So about 75% of all options being traded are put options. But something new that we're looking at yesterday, March 2200 puts down below, going 6 months out to March. Those were one of the most heavily traded options, a new position that was taken. So we'll have to watch that one coming up. This is Scott Bauer on the floor of the CME Group.